After years of back and forth negotiating, what do you know? Microsoft and Yahoo have finally agreed to a 10-year search and advertising partnership. This in an attempt to take on rival Google. Now, if you recall, back in 2008, Yahoo rejected Microsoft's $47 billion offer to buy the entire company. Take a peek here at how the three are trading. You can see Yahoo, Google both trading down, Yahoo most significantly, more than 10% there. Microsoft, however, up just slightly. David Faber joins us right now with more news on the deal. Hey, David.
Thank you. Yeah, you notice, of course, that stock price of Yahoo down. Now, it had been up in part on speculation that a deal would get done. Nonetheless, there is some disappointment in the lack of an upfront payment. Let's bring you some of the details on. As you said, Trish, this long-awaited deal, one, of course, that was, out there more than a year ago at what at the time were perhaps more generous terms for Yahoo. This time, Microsoft is going to pay for traffic acquisition costs at an initial rate of 88% of search revenue generated on Yahoo's owned and operated sites for the first 5 years of the deal. Then it adjusts, but essentially Carol Bartz, the CEO of Yahoo, indicated it stays in that range. There is no upfront payment, however, with the deal. Different than an offer that Microsoft had made about a little over a year ago, which included $1 billion upfront and some guaranteed revenue from the deal. The companies could face they will face antitrust scrutiny. Likely they're going to get through it, but nonetheless, the close is hoped for in early 2010. And as this moves along, we will focus in part on how that is going on the antitrust front. What does it mean ultimately for Yahoo? Well, it is still a positive, certainly, in terms of the numbers. Again, perhaps less than some investors had hoped for, but they're talking about $500 million annually in GAAP operating income that will accrue as a result of the deal once it is fully operational. They will cut CapEx because they don't have to spend as much on their own efforts by $200 million. And they ultimately see as much as $275 million in operating cash flow increases, again, as a result of what is essentially outsourcing their search to Microsoft or under this so-called partnership of the two companies. In the press release, Carol Bartz, Yahoo CEO, said, quote, "This agreement comes with boatloads of value." Of course, one of the questions is what kind of boat? You're talking about a little rowboat or are you talking about a tanker? But I've never seen that. Boatloads. Good for her. Yeah, exactly. We're talking off camera here, Larry and I. All right. As for what that actually means, well, here's what Bartz had to say on the company's conference call.
What was really important to Yahoo is that we had a deal that flowed successfully through our P&L. Having a big cash payment up front doesn't really help us from an operating standpoint. We really wanted, what was most important to us was a significant tax rate.
And that they got at 88%. Nobody's arguing about that. But some argue ultimately that the benefits that are accruing may not be as much in some parts as the risk that's being taken. Here's what analyst Joseph Squali from Jefferies had to say.
There is going to be some integration issues. There are going to be a number of risks that having Yahoo own its own search business didn't exist, and now obviously they have to deal with them.
Remember, they spent a lot of money to develop their own algorithms under the name Panama. As for Yahoo over time, take a look at the last 2 years. Of course, the stock hit a low of around $9 a share. It was only, early 2008 when we got that initial bid from Microsoft. They ultimately turned down what could have been $33 a share in cash and stock from Microsoft to buy the company. Then there was the search deal that they surfaced that ended in no deal. And finally, a year later, here we are, Trish, with the deal in hand.
Okay, so one of my questions for you here, David, you look at the technology that Yahoo has had on its search engine, and, I don't think anyone's going to argue that they go to Google first when they need to do a search, not Yahoo. And there's kind of a similar feeling right now about Bing. So is Microsoft going to have to really step up its efforts to develop these algorithms to really create a product that can go head-to-head with Google?
Well, Microsoft would say that they have already done that in part in Bing and that they do have the algorithms conceivably that can compete. The key, though, is acquiring traffic, and that is what they hope to do certainly through this partnership. Those algorithms only improve as a result of ultimately more and more people making queries, and so you do need to do that. That's one of the hopes here. The question, of course, is will it be enough? Google continues to have 65% of the search market here in the U.S., and I believe 78% worldwide.
Melissa's much more bullish on this than I am. She'll get in a second. Let me just ask this. These new algorithms in technology, Microsoft, Yahoo, as I understand it down through the years, on Google you can click to sale, and you can't do that on Yahoo. Has that changed any? Because that's always what's given Google a big booster, besides their marketing. You can click right through to the sale, and they can't do that on Yahoo. Has that changed?
I don't know, Larry. You know, display advertising yet is not a part of this.
They never could. Is that a new thing?
I think you can. I really.
All right, if you can,
why don't we do some shopping during the commercial break?
We should go on and take a look. Yeah.
Right.
Frankly, I don't use Yahoo, so
I do.
You love
and Melissa, can you?
I think you can click right through.
Yeah,
I think you can on Yahoo as well, but I'm sure we're going to get a million emails about this right away.
Why else do you like this
deal? I think we're going to talk about that in this.
In this. Okay.
We'll coming up. Yeah, we're going to get to the antitrust issues.
You have good body language. You're ready to move on this.
Hey, David, thanks so much.
Sure thing.